It's Nvidia.
Nvidia.
Obviously, all eyes are on Nvidia.
Maintains a buy rating on Nvidia, price target of $1,100.
In the last decades, the world has witnessed an unprecedented process of technological development. If 40 years ago, the internet was something unthinkable, while cell phones and computers were luxury items owned by few, today we've just entered the artificial intelligence era. Now, you may be a supporter of AI, or you may fear it, but the fact is that its growth is inevitable, and that's why so many investors are piling into Nvidia shares. Now, is Nvidia stock cheap or expensive? Stay right there to find out, because I am sure you'll want to see this, because even though Nvidia stock has multiplied by 27 times since the beginning of 2019, currently trading at $930, many investors believe there's much more money on the table, as we are still in the early stages of the massive AI secular trend.
The size of the opportunity is growing.
And the growth trajectory doesn't look like it's slowing down. To me, it looks like it's going to accelerate for them.
Now, no one doubts Nvidia is an excellent company with a great future ahead of itself. The only problem with it is that it trades at very high multiples. But anyway, is it worth buying? That's what we'll answer today. We will understand which kind of expectations are priced in this stock, and in the end of this video, I promise you will be able to decide for yourself if Nvidia is a reasonable buy or not. And spoiler alert, we may have a 35% upside in front of us, depending on what we expect, right? But stay until the end, because we will also talk about what can happen to the stock price if Nvidia doesn't deliver. Now, before calculating the fair price for Nvidia stock, let's understand 3 key points about why Nvidia is such a great company and why everybody loves it. First, this is a super growth company. From 2015 to 2023, Nvidia's revenue went from 5 billion to 60.9 billion, which represents a 42% annual growth rate on average, which is just an outstanding pace. And they have everything to keep on growing a lot, as they have the wind on their back. They have the best products, they have the best technology, they have clients like Google, Meta, Microsoft. Secondly, because of its margins. Nvidia has been delivering amazing margins over the years. Their gross margin stands at 61.7% on average and has been expanding, as we can see here, ending 2023 at 72.7%, which is just amazing. Great net margin also. Nvidia during all these years has been a profitable company with a 30% net margin on average, and most importantly, Nvidia is also a cash generating machine with a free cash flow margin of around 28.5% on average. They actually ended 2023 with a 45% free cash flow margin, which is just unbelievable. And lastly, Nvidia is a Wall Street darling because of its light financial leverage. They have negative net debt. In other words, they have more cash than debt on their hands. But definitely, the most important factor here is growth. But you see, not every great company is also a good investment. You can actually buy an excellent company and still lose money if you overpay for it. In the end, it's all about the price you pay. Now, how to know if Nvidia stock is trading at a reasonable price? Using the discounted cash flow method. But before going into this, if you are enjoying this video, please hit the like button and also subscribe. Thanks! Now, as we've seen in this video, Nvidia has been growing at an unbelievable pace, at 42% per year on average. Now, let's project Nvidia keeps growing at a crazy rate, at 40% per year for the next 8 years. Now, as we've seen, Nvidia has been delivering a 28.5% free cash flow margin on average, right? Now, let's count on a 30% free cash flow margin for the next 8 years. I usually prefer to be conservative, but let's try this first. So, using these premises, this would mean that the fair price for Nvidia stock should be around $960, which would represent a 3.3% upside, which is not exciting at all, right? Using a 10% discount rate. So this would be the price that would reflect these premises, okay? So I don't like what I'm seeing here because I am already counting on crazy numbers and I still cannot see much return. To see some good results, this stock must get to a point in which it starts to reflect really extreme numbers. For example, let's project a 45% annual growth rate for the next 8 years, okay? Now I can see some upside, a 35% upside here. But I know other places, I know other stocks in which I could make 35% without counting on such extreme premises like I'm doing here, like Payoneer, about which we've already talked about here on this channel. And by the way, nothing here is investment advice, okay? So for me personally, this stock is overpriced because usually I like to buy businesses trading at low expectations, at low valuations. So even if they deliver below average results, I can still make money. And I don't see this happening with Nvidia. Actually, quite the contrary. For this stock to maintain itself trading at these levels, at these multiples, Nvidia has to deliver outstanding results. And I just don't like to bet that everything will go perfectly. For example, what happens if Nvidia delivers only a 30% annual growth rate on average for the next 8 years, okay? Which is already massive. But what happens to the stock price? This happens. A 40% downside. So personally speaking, the reward definitely doesn't compensate for the risk. This is already a massive company with massive revenue, so to count on them delivering such high growth rates, for me personally, is too risky. It may happen, but I prefer to let this one pass. Anyway, I'm leaving this Excel sheet in this video's description so you can play with the numbers yourself and decide at which premises this stock is a reasonable buy for you. Okay, you just have to download it from Google Sheets. Well, if you've learned something in this video, don't forget to leave your like and to subscribe. That's it for today. See you next time.